The crypto market took a hit in the past 24 hours. Is this the start of a deeper hit, or are we looking for a bounce? We'll look across the news and the key data sources to determine what happened in the past 24 hours. And I'll give you the real levels that will impact the crypto market, not the retail ones. Welcome back to the Daily Show. I'm Ken, and I look through the crypto market and other markets to help you to make money. I'm grateful to see you here. Now, looking at Bitcoin at the current time, we can see that there are potentially a lot of short liquidations, all the way up to 116,000. This is just something that I want you to keep in mind. Across the past 24 hours, inside the crypto market, there were nearly $1 billion worth of liquidations. And when we look at long liquidations versus short liquidations, it was literally running at 10 to 1. 10 long for every 1 short. People got really super excited about rate cuts. We saw some interesting behavior in the ASX that I pointed out on LinkedIn and X yesterday. I'll talk about that later. In terms of a rate cut, there's currently an 83.3% probability, slightly down from yesterday's 84.7% probability. We know that the Fed is going to cut rates. All sectors in the US market across the past 24 hours were down 0.43%. And we had some standout performance for Nvidia, TSM, Google, Netflix, and of course Tesla. You can see that the healthcare sector was hit pretty hard. President Trump is saying that South Korea tariff will remain in effect, and the Trump administration notice signals that 50% on tariff to hit India will be doing so pretty soon. Meanwhile, in the Wall Street Journal, the Texas factory activity falls back from a brief rebound, and you can see the Dow Jones, the S&P 500, the Nasdaq, the Russell were all down. It's pretty interesting when you read stuff like this. Powell highlights job market worries, opening a path to a rate cut. We know exactly what the probability of a rate cut is. We don't need to read the media. And going across to markets and finance, the Dow loses about 350 points after a record-breaking run. You have to be very careful of news media headlines. Look at this. Blue chip index fell by 0.8%, down by falling shares of Merck and Amgen. One thing to just be aware of, the mainstream media will always put in due to, by, all of those sort of things, but it's not correct. What causes major market indexes to fall is something else, and we'll cover that through the cheat sheet. I pointed out something in yesterday's video about the retail level of 105,000, and I said people are going to make a big deal out of this. You can see 5 hours ago the news article was written, here they are. It's absolute rubbish, but I'll show you why. If you have a look at yesterday's video, when we were talking about Bitcoin, I said it's very important to know the retail analysis. Where are retail looking? Because retail is unfortunately just another word for loses money consistently. You do not ever want to be retail. You want to be an institution of one. At least you want to have institutional grade thinking. This 105 is because of this area here. It's around that 105,709. But if you went down into the tails, it'd be 105. Now, when we look at Bitcoin right now, we can see that we've lost this 112,500 retail level, and I mean it's a retail level. This is where people will be looking from a retail stance. This is called recent indicative price, and it does exactly that. It RIPs your money. The concept is the 105 level is the last stand. I'll just blow that article up a little bit more. It becomes Bitcoin's last stronghold. This is absolute trash. Now, how can I say that, and how can I prove it? When the CTKS method draws up all of price history, it does so according to 2 levels of standard certification. Now, I'm just going to pop into this little box. Remember, 105 is the last stand for Bitcoin. Across the nearly 40 years that I've been inside financial markets, I've heard some absolute rubbish, and it's perpetuated consistently. People believe it's real, and this is a big problem because you're putting money on the line. Now think about this, that 105,709. Now we're going to show you what 2 levels of standard certification does in terms of marking up this chart. What we can see is that there's literally no structure in and around that 105 retail level at all. In fact, the real structure is 103,800. This is why, if you're not using the CTKS method, you're literally flying blind. And this applies not just to Bitcoin, but across all markets, Forex, commodities, stocks, indices. Therefore, is 105 the last level of Bitcoin support? There is no support at 105. There's no support at 104,400, at 104,200, and there's no support from 106,600 all the way down to around that 104,000. The real support starts to play out, you could say, at around that 103,600 level. Please be very, very careful. You need to go independent from the news. That is if you want to make money. What happened in the past 24 hours? We saw this big retracement in the S&P 500, and this is what I pulled your attention to in the last video. We would have expected it to come in and at least test this zone. The fact that it didn't is really, really good. It means there's a lot of strength inside the main market. Now, what does that mean to the crypto market? If the buyers come in here on the main market, it means that the crypto market will rebound, and that's going to catch a lot of people off guard, because what's the predominant theory inside the crypto market right now? If the US markets start to bounce, we would expect a move up at least to the 112,522 mark, and if they recover, we would expect a recovery inside of the crypto market as well. But this is going to fly in the face of the concept that we've had literally 3 days of negative price action. And of course, now all the news headlines will be Bitcoin is selling off, Bitcoin is selling off, the sky is falling, basically your Chicken Little act. Of course, that will create all retail to go, well, not all retail, but retail traders who leverage to go short, and they may make some money only to get absolutely and utterly whacked, which is the unfortunate thing of the crypto market. Stop hunts are real, my friends, so please be careful. Now, you know, in this 105 area, there is literally no structural support whatsoever. The best thing that you can do is to mark up your charts with level 1 and level 2 standard certification. At least that way, you'll know where the real support and real resistance levels are inside the market. The issue to understand with Bitcoin, especially with Bitcoin, it is an inflationary hedge. So if inflation is coming up, we expect Bitcoin to come up. If inflation is coming down, we expect Bitcoin to be coming down. There is no problem at all with inflation coming up. Tariffs make it an absolute certainty. In the next 24 hours, please keep a lot of attention on the S&P 500 futures, the Dow futures, the Nasdaq futures, and the Russell 2000 futures. If these futures start to turn around, you know that the main market will go in that direction. That's what the futures are for. But if they start to crumble, you'll know that the potential for more negative downside action on Bitcoin is undoubtedly there. Now, a lot of people want certainty. The certainty is this. For example, in yesterday's video, I was talking about the fact that the VIX was very overextended to the downside. That meant that a retracement was inevitable. That retracement on the VIX, and we'll look at the cheat sheet in a tick, that retracement caused this. This is nothing other than normal price action. A lot of people will say it's not normal price action, but unfortunately it is. This is the volatility of the markets. Now you can see the ASX sold down quite substantially, but look at it just reflecting Bitcoin. Bitcoin reflects risk, and that's why you need to look at it. Even if you don't trade it, you don't invest in it, please make sure that you look at it. That is, if you want to make money and to keep your money as well. Just zooming out and looking on a daily basis through global markets, we can see that Bitcoin has been retracing for some time, the markets in general are not looking too bad. We're not seeing signs of systemic weakness in the market at the current time. They're just pulling back in a natural fashion, and when they pull back long enough, they can go again. And don't forget, the job of the institutions is to basically wrong foot people inside the markets. Until you get the knowledge, this is just what will happen. There's a ton to know about financial markets, and when US liquidity starts to kick up, we'll know that they're supporting the market. At the moment, there is no support inside the crypto market in terms of injections of US liquidity. You'll find that your psychology gets an absolute hit inside the markets. The things that make us successful in real life can actually work against us inside financial markets, so you need to unlearn what you've learned. If you go to YouTube, put in that @ followed by CTKS method, pop into the playlist, make sure you subscribe to the channel because there's always new videos coming out here. Now, these videos are not actually videos, they're songs, they're music, but they are so wise. There's so many things in here, it's absolutely free to listen to. They will help you to make money and to keep money. And thank you to everybody for their very kind comments. When it comes to the longs and the shorts inside Bitcoin, you can see this particular white line there. That's the S&P 500 futures. How has it been hanging out with Bitcoin? It would just hazard to say they're following each other. And this is pretty much normal case. Now, what are we seeing here with the green line? This particular line is the Bitcoin longs. The longs are buying this dip. They're buying it with an absolute abandon. Buy the dip, buy the dip. Now the shorts went in hard and right at the wrong time, and then they had to cover because they got liquidated. Or they naturally reached their profit positions and got out of the market. The key to note, right now, we actually expect a bounce up in the next 24 hours. That's what I'll be looking for. And this is probably going to fly in the face of retail sentiment, but retail sentiment is wrong-footed sentiment. All that we need to do is to understand where the structure is and monitor structural passes and structural failures. And we do not ever use recent indicative price because it will RIP your money. First of all, let's look at total crypto market cap just from a structural perspective before we get into the cheat sheet. One of the things that we need to understand when there's panic inside the market, that will actually result in more and more structural one support turning into resistance levels. This is absolutely natural stuff. You need to look at structural confluences across the row 1 to row 8, in other words, the cheat sheet. The major reason that people lose money inside financial markets, they do not know the rules, they do not know the structure, they can't assess where structure plays into their purchasing decisions, and they cannot sell. When a wrong decision is made, it's not a wrong decision, it's just the price moving in a wave. And you can see this white line. That white line is the S&P 500 futures. Now, the S&P 500 futures were getting weaker before Bitcoin was selling down. But as soon as the S&P 500 futures started to flatten out, we saw that push into Bitcoin and the total or entirety of crypto market cap. Now, what we're looking for here is a kick up in the futures. That's going to be really, really important. You must keep your eye on that today. If you can relate to something like this, if I buy, it loses half its value. If I hold, it doesn't go anywhere. But if I sell, it increases. All you need to do is to look at structure. Turning towards Bitcoin, we can see total crypto market cap and Bitcoin did pretty much the same thing, and that's what we would anticipate. We're seeing some fairly constructive action inside Bitcoin's price momentum at the current time. But what we do notice, these particular lines were drawn up in yesterday's video and the videos before. They show where the structural levels are inside the crypto market in terms of Bitcoin. What we can see here is that we came up into structure, the structure didn't hold, we passed through the level and we've gone down to lower levels. It takes 2 levels of standard certification to be able to read structure. It's not something that you're just going to pick up by watching the daily videos. But when you have the knowledge, it's an absolute game changer. This is X-ray vision. For example, if you're a non-medical professional and somebody just hands you an X-ray or an ECG scan and says, interpret this, you probably say, I don't know how to interpret that. I'm not a medical professional. I have not been trained. This is exactly the same thing. So what we saw were structural failures on the 112,617, a big structural failure on the 112,060. We passed through the 111,200 mark and we've come down. Now, there is some fairly good structure underneath this particular price part or point at the current time, and that's actually playing around this 108,900 level. That's the way I would suggest that you trade and invest in Bitcoin, just knowing where the structure is at all times. As you get more and more confluences, you can tell where the structure is, and also, well, tell where to buy and sell based on structure. We read these to the right. The more of these little dashed lines and dotted lines that you see, which are called CTKS levels or Stanfield levels, the more the strength is inside the market. You can see how they can hold it up, how they can flick it back and support it and reverse it. If it's not going above, it's going to the level below, and structural failures become very important to understand. In negative price momentum, it will take you a while to read and especially to interpret and understand structure, but when you do, you'll do things like what I do on the daily channel. We knew this retracement was incoming, but the rest of social media was just ablaze with banana zone theories. One thing to remember is the price is always moving in a wave. It's always going up and down, but it goes between structural support levels and structural resistance levels. Structure doesn't act as a brick wall. It acts as a gravitational area. And this is what throws retail completely off the scent of the smart money trail. As Purpuratum said in a previous video, no CTKS structure, no trading and investing, simple as it is. It is literally that important. And Kirk from San Diego said, cheat sheet plus structure, no stories, just pure market intelligence. Thank you, my friend. And LMG said, I cannot and will not trade without the cheat sheet, especially if I want to keep my money and to grow it. Thank you, my friend, and a big thank you to everyone. Now, what is the cheat sheet? If you go to ctksmethod.org and then you just scroll down here until you find your cheat sheet to mastering price action, you can just download it absolutely free of charge. Now, what is inside the cheat sheet? I'll just go through and show you just specifically what particular charts are included by rows and how to use them. The cheat sheet is comprised of 7 rows. Row 1 and row 2 are vitally important to look at. Inside row 1 and row 2, you get risk on and risk off indicators. You look at the cheat sheet in terms of Forex pairs, and they can become really important. For example, if the DXY is spiking up, that is generally bad for the stock market and bad for crypto. Looking at the yields too is very important for government monetary policy, and you can see also that we cover off gold, silver, oil and also copper, the key commodities. It is row 1 and row 2 interplays that actually create risk on and risk off inside row 3, which drives also the crypto market. We also need to stack probabilities inside row 3 by looking at row 4 and inside row 5, Bitcoin and total crypto market cap, by looking more broadly at the entire crypto sector. That is, the main players. Looking into row 1, which is the VIX, the DXY, the DXY, US dollar currency index, dollar yen, the 10-year, the 2-year and oil. Going back a couple of days, we can see that as the VIX fell off the planet, Jackson Hole, Fed chairman coming out, everything is good, rate cuts ahead, The crypto market just went nuts, but we already knew rate cuts were ahead. This was just an overreaction, an overpricing, and we didn't get a continuation in that. In fact, across the weekend, we went a little bit up and then it dumped like hell. Now, what was the culprit of this? Of course, the VIX was way overextended to the negative side. It had to bounce back. So Bitcoin would have been hit anyway. The entire crypto market cap would have been hit. But what we saw was something else. We saw the DXY starting to gain strength, the yield starting to gain strength across the 10-year and also the 2-year. Dollar yen starting to gain strength. When row 1 comes up like this, we can expect the crypto market to do the exact opposite. Not at all times, but on average. One thing that I like with the DXY coming up to this level, it's basically reset that particular movement. So it's just literally done and dusted as far as the DXY is concerned. This could put us in a level of consolidation. So what you might see is the crypto market trying to consolidate, trying to figure out where the main markets are going. That is very fair. We've also seen a little bit of a decay in the yields. This is also good stuff. If it actually does a negative CTKS cut and starts to come down, that will put positive momentum inside the crypto market. You must just keep your eyes on the VIX primarily at the current time. And also, I would urge the DXY. Now, what happens in row 2 should be an inverse of this. Having a look at row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, we can see that junk bonds rose up with Bitcoin. Bitcoin did a bit of a bad move and has since followed that up-down trajectory of junk bonds. But that particular sell-off was pretty wicked. It happened in a low liquidity period of time. What we need to keep our eyes open for when we look through the cheat sheet are specifically what are gold and silver doing. We knew that gold had a big resistance up around that 3370 mark. It tried to get above it, it's not getting above it, it's dropped down. It's currently 3360. But if we see gold starting to come up and over that particular resistance, that's actually really good for Bitcoin. Gold and Bitcoin tend to move together. At least they move in a directional stance. It may not seem it, but it is the case. Now, when we look at silver, we also want silver to rally up. That typically leads any rally up in the crypto space. You can see that commodities are really well associated. And also, we saw the euro dollar just at the time of yesterday's recording, it was just up there. Now, it's come down pretty sharply and retraced that move that we saw. All of the profit on that euro pair just went clearly out the window, but not so with the Aussie dollar. The Aussie dollar has held up more effectively. To support a rally inside the crypto space or the crypto markets and also the stock markets and also commodities markets, we want the euro and the Aussie dollar to come up. Also, we want to see copper to come up. I think what's more likely to happen at the start of the US Open when it comes around in quite a few hours' time, we're likely to get a downplay into all of that structure. And then if the buyers are strong enough, and it's indicated that they probably are, we'll see a big bounce up. And that will just take everybody off guard, but not us. We're actually expecting that. But if we pass through all of that structure on the S&P 500, do an underside retest, well, that's a completely different game, and you must be prepared for that as well. I'll get a little bit more specific here. On row 3, we're looking at the S&P 500, the NASDAQ Comp, the Russell 2000, and the Dow. We can see that the S&P 500, this is not the futures, just the SPX. It came down like this. Now, if we look without structure, we have no clue where this thing can turn around at all. I just popped on the indicator and then I drew these SZs around these particular areas. What we can see is the S&P 500 is coming into some very major structural support. It is likely to get caught here and to bounce upwards. In all probability, it just too far overextended. It came into this structural overhead resistance, which is incredibly strong as well. You can think of that resistance playing at the 64.89 area. So the actual odds for the next session in the US is to come down, tap this area, and then reflect up. This area was really strong, and that was way too overextended. This is just a normal wave-based function. We can also see that the NASDAQ comp is following suit, the Russell following suit, and the Dow also. All of these movements, and mainstream media won't tell you how it really works, because that would kind of just ruin the mystery of the fantastic headline. All of these indexes came down simply because the VIX was too overextended and had to go up. The DXY was too overextended and it had to retrace as well. Now the markets are completely positioned in the opposite direction. Row 4 are the subcomponents of the major market indexes. So we're looking at Apple, Microsoft, Tesla, Nvidia, and we've also got strategy in there. We can see a couple of days ago when Bitcoin just rallied up, Apple also rallied up, Tesla also rallied up, Microsoft rallied and then got weaker. And we can see Nvidia rallied up as well. When Bitcoin started to sell down, we saw that that was an impact inside Apple, and that basic direction and that momentum, that directional correlation has been playing out inside Apple. We've also seen it playing out inside Microsoft and also the directionality inside Nvidia. But Nvidia and Tesla have both been strong. Now, what does this mean? This means something really specific. The probability of an uptick is now become greater because we're stacking probabilities. Of course, you would have to look at these charts from a structural level. And what about Michael Saylor's strategy? It's just following Bitcoin from a directionality perspective. So we're getting some indications, but we must check the cheat sheet continuously. Keep your eyes on the future, keep your eyes on the DXY, keep your eyes on the commodities as well. The euro, I think, is a very good thing to look at today. So getting into row 5, total crypto market cap and Bitcoin. What do we see there? Well, of course, they came down, and they came down relatively hard. ETH was pretty strong, but it cannot withstand the gravitational pull of Bitcoin. If Bitcoin comes down, baby, everything's coming down. It's just the way of it. The media headlines are going to turn incredibly negative and probably just exactly at the wrong times, which is normal. Looking into row 6, which is Litecoin and Bitcoin Cash, which are literally Bitcoin proxies, Binance Coin, centralized exchange, finger on the pulse, Ethereum Classic, what's happening to ETH? We can see over the same period, as Bitcoin comes down, it drags all of the alts down with it. Nothing can withstand the power of Bitcoin. Therefore, if you're not looking at the structural levels on Bitcoin and the structural levels on total, you're guessing, you're gambling, and it's probably going to punish your account tremendously. Looking deeper into row 7, which is ADA, Solana, Dogecoin, and XRP. What we've noted is that big sell-off. Now we're starting to see a period of consolidation, and XRP is actually looking pretty good, as is Doge. We could see some life inside the meme coins. So please just keep these ideas on the plate. We need to keep a very close eye on what the index futures are doing. If you want a substantial edge, just go across to YouTube, pop in that @ and then CTKS method. This is just a really new channel. Go to playlists and just play this guy. Please make sure that you subscribe to the channel as well, because new informational, incredibly dense in terms of knowledge value songs are coming out. This music will make you a fortune. If you want to listen to something and hum along, hey, these are the things to do it too, and they're pretty beaty. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.